Selling cash-secured put options. One of the best ways of making money online is by selling options. Today we will be discussing selling cash-secured puts. A put option is a financial contract that gives the owner the right, but not the obligation, to sell a specific stock or asset at a predetermined price, called the strike price, before a specified expiration date. In simple terms, it's like buying insurance for a stock you own or think will go down in value. Here's a straightforward explanation. Imagine you own a share of company ABC, and you're worried its price might drop. You can buy a put option that allows you to sell your share of ABC at a fixed price, let's say $50, even if the actual stock price falls below that. If the stock price does drop below $50 before the option's expiration date, you can choose to sell it at $50, protecting yourself from further losses. If the stock price stays above $50, you're not obligated to sell, and you only lose the cost of buying the put option. So, a put option gives you the right to sell a stock at a set price to limit potential losses when you expect the stock's price to go down. Selling cash-secured puts is a common strategy in options trading that allows you to generate income while potentially acquiring a stock at a lower price. Here's the best way to execute this strategy, taking into account factors like delta. Determine your level of risk tolerance before you start selling cash-secured puts. Recognize that even though this technique may be more conservative than other options methods, there is still a risk of losing money if the price of the stock drops dramatically. Choose an expiration date that fits your investing horizon and expectations for the stock. Although longer-dated options typically have higher premiums, you could have to commit your money for a longer period of time. Strike price. Pick a strike price that is below the current market price yet at the level at which you would feel comfortable purchasing the shares. This is known as the out-of-the-money strike. Delta. For every $1 fluctuation in the underlying stock, delta measures how much the option's price is anticipated to fluctuate. You might want to focus on options with a delta between 0.20 and 0.30 if you are a put seller. These options often strike a compromise between higher premium income and lower probability of assignment risk. Sell the put option you chose in the trade. You get paid up front when you sell a put option. In order to cover the prospective purchase of the stock at the strike price, if allocated, make sure you have enough cash in your trading account. We call this being cash secured. Next, keep a close eye on the options position. As time goes on, a number of actions may become necessary. Buy to close. You can think about buying the put option back in order to close the position and earn a profit if its value drastically drops, ideally due to time decay. Consider rolling the put option to a later expiration date or a lower strike price if the stock price falls and you want to avoid being assigned. By doing this, you might be able to earn more premiums and possibly buy the stock at an even lower price. If you are assigned and the stock price drops below the strike price, be ready to buy the shares at the agreed-upon strike price. You'll need to have the money on hand at this point. Options trading, including selling cash-secured puts, can be complex and carries risks. Being a skilled trader requires constant self-education, strategy improvement, and risk management best practices. Always have an exit strategy in place for each trade, and be ready to adjust to shifting market conditions. Keep in mind that trading options carry significant risks and may not be appropriate for all investors. Before putting such techniques into practice, it's essential to seek advice from a financial advisor or a specialist with knowledge of options trading, especially if you're new to options. Additionally, past performance is not indicative of future results, so trade carefully and responsibly. If you have any questions, please post them below in the comments section.